Ben Turney. I am the CEO of Kavango Resources. We have large-scale copper exploration projects in Botswana and large-scale gold exploration and production in Zimbabwe. Our main focus for the business is moving our Zimbabwean projects through to production, with news imminent about how we're planning to move into free cash flow generation by Q1 2026.
Free cash flow. That's a word you don't hear much from junior miners. Ben, good to see you. It looks like you're over there in country.
I am, yeah. I think as you may remember from last time, Matt, I moved down here full-time in January last year. I spent 9 months here in 2023. So yeah, Zim has been my home for the last few years.
Fantastic. And how are you finding the reception from the locals with regards to mining? Are they welcoming it?
They are fantastic. I've actually been today at a meeting with the local community and the local contractors. We're putting together quite an innovative model to work with the small-scale miners, putting them into a formal cooperative to provide them with the legal rights and protections to continue mining on our ground while we do the much larger scale mining underneath them. So we've been extremely well welcomed by the local tribal leadership, the local district council, provincial mining directors, security services. We've really established ourselves in the region, and I think everyone can see that Kavango is here for the long term and to invest seriously in the Philabuzi Greenstone Belt.
Right. Okay. I may come back to that in a bit, but I think the thing of interest that people want to get straight into right now is the fact that you're saying we are moving into a mining phase, a mining decision. So tell us what you're doing in Zimbabwe, if you don't mind.
We've gone through to making 4 discoveries, one of which we're now about to bring into pretty significant pilot scale production. The long-term future is looking fantastic because the 200-ton-a-day plant, that really is the beginning. Our ambition is much bigger than that. Each decline we put in, we're looking to get up to 1,000-ton-a-day production. So over the next 5 years, we're expecting to experience pretty serious growth.
Well, and I want to talk about drill results. I do, but let's get some terminology out of the way, because I think you talk about spiral declines or exploration declines. They're not like usual declines. So maybe just explain to people, how they work, where they've worked, and why do it.
So, spiral decline mining is a method of mining that's been developed in Western Australia over the last 40 years. It's been incredibly successful. It was driven by the much harder economics that they have in Western Australia in terms of lack of infrastructure, lack of local population. So the ore bodies that they have there, they had to find a better way of mining them than using traditional shafts. A spiral decline is a corkscrew-shaped tunnel that is constructed into the Earth's crust and takes you up to the footwall of the outer reef that you mine. And from that point, you then mine horizontally while also taking your spiral decline down lower. There are many advantages of spiral declines. They're much quicker to construct than traditional shafts. You get into production much quicker. They're much safer. But the biggest advantage is you can get up to 10 times the production that you would through a traditional shaft. The shaft is obviously constrained by the 2 cabins that go up and down the shaft. That limits your hoisting capacity, of course. A spiral decline sees trucks, loader trucks, being driven up to the ore body face, where the ore body is blasted, or ore bodies, I should say, plural, are blasted. Automatic loaders load the trucks up and they drive the ore up to surface. You can do 10 times the production. And in Australia, they have some mines where they're going 1.8 kilometers vertical depth with 60-ton trucks. I mean, it's really quite incredible technology. So what we're looking to do in Australian terms is really engineering ABC. So we're very excited about the potential of this and the ability of our team to deliver within the timescales that we've set.
Right, okay, now let's get back to the kind of drilling, and I guess more importantly, the kind of resource definition and development. What can you tell us about the drilling so far and what's to come? Because I'm intrigued by, getting to a point where you made the decision to actually start mining.
So we designed the drill program at Steenbok Prospect 4 with a view to testing 400 meters of strike. The reason for that is that a spiral decline can cover about 400 meters of strike because the ventilation tubes that you need, they go about 200 meters either side to pump fresh air into the mine and extract the fumes from the vehicle. So that's one of the engineering limitations that you have. We looked to test the 400 meters to see whether or not we felt there was a mineable ore body there. So we're not at the resource stage yet. The reason for that is we've taken the view to put the decline in because that will save us time and it will cost less than than doing a traditional sort of drilling campaign to define an indicated resource. In terms of the time it would take us to drill that from surface and how much it would cost us, putting the decline in is a much, much cheaper option than that, and also actually building the plant at the same time. So we recognize we are taking a risk, but what we've seen from the results so far are very encouraging. Our team did a conceptual study back in November last year. We didn't publish that in the market. We kept that as an internal document. But within that conceptual study, we wanted to identify 4 producing parallel reefs on any given level to give us confidence that we would have a mine. We've actually identified 8, and the average grades that we're looking at look like they're above 3 grams a ton, running at widths of 0.8 meters and above. So this, in terms of our conceptual study, met all of the basic thresholds, which gives us the confidence to move forward with this spiral decline.
And when talking about we'll come back to the technical in a second. Talk to me about the team, because you've gone from explorers into talking the production game, and I kind of admire that. There's a few companies trying to push that narrative into the marketplace, but you've got to have the people who can execute. So, what have you got?
Absolutely. And, one of the things about so many companies at our level is how many people on their teams have actually ever built a mine. It's one of the big weaknesses in this particular model. Well, we've employed a guy called Craig Hatch, who's an extremely experienced mining engineer from Western Australia. He was introduced to us by Dave Catterall, who's been leading our geology. Dave and Craig worked on the Zone 5. In fact, Craig was actually the guy who designed the Zone 5 spiral decline in Botswana for the large copper mine there. Well, Craig's also got over 15 years of experience working in the goldfields of Western Australia. So he's really been the guy who's taken the lead on our technical vision and our technical strategy, has done a lot of our technical work, has also been signing off as our competent person over the last 10 months. Now, in parallel to working with Craig, we actually moved into mining as a company in March 2024. We did that by rehabilitating a shaft at our Prospect 1, and also working with the local contract miners with the custom milling plant, the stamp mill operation that we set up. Now, that operation was never going to be a company maker. We never expected that. But what it did give us was an opportunity in real time to get into mining in Zimbabwe. So we could start to build up our team. We could learn what it was like to mine here, the kind of issues that we would face, and also, frankly, to enable us with a safe environment where we could make the mistakes that inevitably a company like ours, as an exploration company looking to transition into mining, would make. I was far more keen that we make those mistakes where the numbers weren't material and learn those lessons, pay those school fees before we got into large scale production. And what that means for us today is that we've got really a battle hardened team. We've got mine manager, we've got plant manager, we've got the teams underneath them, we've got technical services now already in place. We've actually just recruited, as we've also announced, a general manager who's actually taken the leap, and this I'm most excited about. He's joining us from Barrick Gold. So he's a Zimbabwean, he's been out of country for the last 13 years with some of the economic troubles there've been here in Zim. Some really talented people moved abroad. He spent 8 years in the goldfields of Western Australia, was most recently managing a mine for Barrick up in Tanzania. So we've recruited a superstar to come in and help oversee, well, not help, lead this program from the ground, obviously working with Craig, who's based out in Perth. So we're not one of these companies that's selling a vague vision of how we're going to move into production. We've already built that infrastructure ready to be able to deliver this plan operationally. So I'm very, very confident in the team we've built, the work that they're doing, and their ability to deliver.
Okay, and so like say, you paid the school fees, right? You've been able to assemble the team here, but now you got to tell a story which is more than just about kind of wiping its nose. It's got to lead to some kind of growth story. So some of the things that I'd like to understand is, say, for things like equipment procurement, importation, in a backdrop of Zimbabwe currency and FX controls, and all of these sorts of things which kind of sort of maybe affect your ability to make margin on this. How does this expansion, how does this growth manifest itself?
So it's all built into our TEA study that we're looking to release in the coming weeks. We've really done a huge amount of work in this. You've actually hit the nail on the head of one of our biggest concerns, is how we would bring this fleet in, because the fleet that we need doesn't exist here in Zimbabwe. We've already been talking with manufacturers and with second-hand providers of equipment. We believe we've identified the twin boom jumbo that we need to bring in. That's a particular type of machine that's used to construct the spiral decline. And surprisingly enough, there are also finance opportunities for financing our vehicle fleet. Because obviously these are physical hard assets that are being brought into country. Kavango is a listed PLC, so as a counterparty, we're viewed as being reliable, even though we are based here in Zim. We're actually expecting that side of things, with the work that we've done already, we'll be able to satisfy. In terms of the rest of the plan and how we can deliver that, I think a lot of the questions that you might have, we'll be able to answer when we put that TEA study out to market. But one thing I can say, these are internal numbers at the moment, but I don't believe this is price sensitive. We've used a gold price of $2,400 an ounce, and we use a head grade assumption of 3 grams a ton. So I think the gold price is very conservative to where we are, particularly during the payback period for this project. But the grade as well is looking at the lower end of our expectations based on the results that we've just published today. So all in, the economics of this look very attractive. And based on those assumptions, 200 tons a day, running at 25 days a calendar month, we're looking at generating somewhere in the region of just under $500,000 free cash flow a month. I mean, this is a project that will really start to pay. And from there, that gives us a platform then to grow and build the business out.
But it's the latter that I'm interested in. Obviously, the free cash flow of $500,000 is very, very welcome, indeed. The numbers are based on what this one spiral decline, and if so, you know, how do you chase more? You talked about 7 kilometers of strike earlier. When do you actually?
Across our projects, we're looking at about 7 kilometers of strike.
Right.
And as I mentioned, one of the engineering limitations on a decline is they can cover about 400 meters. So we would need to put a series of declines in. The economic model is based on each individual decline. So the MPV 8 calculations that we're going to put out into the market, that's based on just a single spiral decline. We're very encouraged by what we've seen in those numbers as well so far. So we're really looking forward to put those out. But also in terms of the growth, something to consider with this, Matt, is that we're designing the spiral decline to do 200 tons a day to begin with. But we've got to keep an eye to the future. Let's just say hypothetically that this ore body could cater for 1,000 tons a day of production. We've designed the tunnel so that larger vehicles can go down there. So in the event we do decide to upgrade the processing plant, we're actually in a position where we've engineered the solution to be able to deliver that kind of growth. So when I talk about Kavango now, I mean, I try to frame us in, we should be looked at more as a tech startup in terms of our earnings growth potential rather than just simply a mining company. This opportunity in here in Zimbabwe is absolutely enormous, and as we're demonstrating on the ground and the speed that we're moving at, it's actually realizable as well.
Where do the synergies come from? Because I'm you know, across your entire property, you've got 7 kilometers, which is great. But are you literally having to replicate the same cost structure for each one of those spiral declines, or are there savings to be had? And then obviously, so you're saying is maybe if you do design this as a kind of satellite type setup, there's savings to be made in terms of the processing, etc. So how are you picturing this? You made the brave decision to go into production, so you must have an idea.
So we view each individual decline as a mine in its own right. Even though the 7 kilometers is spread over 4 targets, we'll find that we could put anywhere between 2 to 6 into each of the targets that we're working with. So each decline, the economic model will be on the basis of an operating mine. So the consumable costs, the mining costs, the energy costs, and what have you. Well, you're quite right to talk about cost savings. We see the cost savings, the shared savings will be in the processing facility together with the operational and logistical support, because obviously the more of these that we can start to service, then the greater, also the less that we cost, or the unit cost for production itself. So we do see quite substantial savings. The first one we expect will be more expensive. And of course, there'll be other savings as well as we move into mining. There'll be more that we learn about savings we can make as we're putting these declines in and as we're mining as well.
Right. And how much money, because I'm sort of interested in the kind of sequencing and prioritization of these additional mine projects. How much money is spent on exploration to actually allow you to understand how and when and where you go next with any kind of production profile?
So the budget for each spiral decline we put in, assuming a 200 tonne a day plant, it comes in at around about $10.5 million. That includes the underground exploration to drill out the resource that we'll need from there. In terms of the surface exploration, there is more work that we need to do at surface on some of our other targets. So we recently put drill results out from Prospect 3, which is called Night Shift. We know that we need to return to Night Shift to put another 3,000 meters into that as an underground drilling target. We've also recently announced that we're exercising the Nara option. We have a drill program at Nara that we're also planning to do. So in terms of the additional costs, we are talking, there are quite a few number of millions that we still need to spend on exploration. However, the key thing about mining licenses in Zimbabwe, and this for me is one of the country's greatest kept secrets. You've got to remember that Zimbabwe is at the bottom of pretty much all the league tables as a mining-friendly jurisdiction. For me, that is complete nonsense, because in this country, this system of gold claims that we have, and we're working with, our projects are contiguous blocks of gold claims. Well, a gold claim is a fully permitted mining license that's held in perpetuity by production with no spending targets. It's a dream of a licensing, permitting environment for us to be able to work in. So that gives us an enormous edge and means that our projects are basically held forever while we're operating and mining. So it gives us, although the amount that we'll need to spend on exploration will cost quite a lot, our intention is to fund a lot of that out of future cash flow. Getting this 200 tonne a day plant into production and the free cash flow that will be generating, it will be a step change for the business, because it will mean no need for future dilution, because we'll be using the free cash flow generated to fund not only our expansion, but also our exploration as well.
Okay, we should probably talk about some of the recent funding. In terms of pure bond plus the convertible note from the Zimbabwean pension fund. Where are you with capital today to actually get you to the point where you can make advance this more rapidly?
So we have a number of other offers on the table. I mean, at the moment, we've been hugely supported by Pure Bond and by Comiton, the Zim pension funds. We're talking to a number of other major institutional investors with a view to some additional equity being done on the same terms as Comiton. So that's at a penny a share. We're looking to put some news out about that, hopefully in the near future, if any of those deals do come to fruition. And our plan is to announce all of this in conjunction with our listing on the Victoria Falls Stock Exchange. So the Victoria Falls Stock Exchange is Zimbabwe's growth exchange. We're looking to list on that towards the end of June. So we're going to be announcing the final financing around that. We're planning on delivering all of our operational objectives through straight equity. So it's equity investment at this stage while we go through the proof of concept and the pilot production of the 200 tonne a day plant. We're then expecting in future to be able to access debt markets. The reason that we're confident on that is we've already got a number of offers on the table for the working capital facility that we'll need, $3 million to bring the 200 tonne a day plant into production. Our model is working. We've had quite a few visitors from various people who've come and done due diligence. They've seen the work we've done on the ground. They've understood our understanding of what it's actually like to operate in Zimbabwe. And I think a lot of people are actually quite surprised that this country isn't what they expect. The country's reputation is far worse than it actually is to do business here. And you only need to look at the success that Caledonia Mining's had over the last 15 years. They paid, I think, something like 46 consecutive quarterly dividend payments. That, for me, is the bellwether showing just how you can operate down in this country. Our team on the ground, I think, has really surpassed, I hope will come to surpass, a lot of people's expectations.
If I kind of look at things like, okay, the plant construction, the underground development, the drilling, surface drilling, etc., you're going to need to kind of put together a little package here to kind of get things motoring to get to that free cash flow position. So do you know what the size of that total package is going to be?
In terms of the budget, or in terms what
how much are you going to have to raise?
Well, at the moment, with $10.5 million, and we're financed to do that as things stand now. We'll need a bit of extra cash on top to get us over the line. But we're probably looking to raise in the region of about $10 million when we come to list on the VFX.
Okay.
Which includes the $5 million from Comiton, I should say. So about an additional
that's the convertible, right?
Yeah. So we went with the convertible with them. It's more of a drawdown facility than a convertible. I think the way we described that as the actual headline that we used, it's not really a convertible because it's an agreed distribution of equity.
Okay. And so seems a good place to work. In terms of permits, what was that process look like? What's the timelines?
In terms of?
Well, you got to build a plant, right?
So we're going to be building the plant. We're going to commission the plant in parallel to the spiral decline. So from start to finish, our project plan at the moment shows 9 months to deliver the whole thing. So it really is a very rapid turnaround. We've already had the plant designed by the manufacturer in South Africa. We're just about to go through sign off on that. That's another announcement we'll be putting out to the market when that design is complete. On the point that we commission the spiral decline and start to sink the box cut, we will also start immediate work on construction of the plant, ready to bring it here to Zimbabwe and then erect it. We've also started preparing to do the civil engineering work for the plant to be put on top of.
Right. Okay. And so do you find with that next potential raise, you're going to be able to kind of look in and get that from Zimbabwe, because you're getting a lot of support there? Which again, I don't think many people would have expected, but that's something. Or you're going to have to look a little bit further afield.
We're looking to do it in Zimbabwe. I mean, the support that we've had down here has been enormous. This country, its economy has struggled in some ways, but those in the gold sector have obviously made an enormous amount of money, particularly over recent years with the strength in the gold price. And the pension funds are looking. I mean, it's quite incredible that we've raised the pension fund money we have, given that we are still a pre-revenue startup. But I think, again, it speaks to the progress our team has made, which is demonstrable to anybody who comes and visits on the ground. And we've really stood up to some very rigorous due diligence processes, because apart from anything else, we've had to explain to people and really defend our corner on why we're taking such an unconventional approach. The sort of more traditional drill out your resource, pre-fees, feasibility, bankable feasibility study, the market takes a lot of comfort from that. But at the end of the day, we don't believe that's necessary in Zimbabwe. And even if we did go down that route, we would have found ourselves at the end of it needing to raise far more money for a much larger operation, which we think would have been a bridge too far at this stage. So by taking the approach where we're looking to manage our risk, by taking a staged approach, building up production. So the 200 ton a day plant, that really is pilot scale production for a mining project of the size of the one we're talking about dealing with here. But it has given these investors a lot of comfort that we're taking that approach, because these guys obviously live down here. They know about the culture. They know what it's like to work here, and they can see how that approach that we're taking stands, we believe, a pretty strong chance of working here in Zimbabwe.
I think in this market, unconventional thinking is the way forward. So that's Zimbabwe, and I do look forward to hearing how things advance for sure. With regards to Botswana, and I know focus is a very important word in this business, but with regards to Botswana and KCB and KSZ, is that just ticking over, or are you throwing money at that as well?
KSZ and Ditto are pretty much on ice now. Our focus in Botswana has been on the KCB. Our team on the ground has actually been working quite closely with First Quantum over the last couple of months. First Quantum drilled quite a deep hole they gave us permission to run some of our geophysical surveys over, which has given us some really valuable data with drill control for us to interpret our geophysics. So we're just in the final stages of analysing that data. And our plan with that is to go back and drill some more holes into our project based on what we've learned from First Quantum. So obviously First Quantum is an enormous company. It's been very kind of them to let us access to their core. We've of course shared our data with them as well. So we're hoping that that's going to give us tighter drill control on when we come to do more drilling, probably in Q3 this year, I would imagine.
Okay, brilliant. Well, look, Ben, and I appreciate the update, and keep doing what you're doing. It's any company kind of pointing towards near-term revenue seems to be getting rewarded at the moment, and I do hope this works for you. Appreciate your time today. Thank you.
Thanks for having me, Matt.